I
No shit. 7 times ago, taking the light.
go inside.
Okay.
Come.
Like, I don't know, why is it all that? You could get a coin there and put it in the money.
Hi, Claudine, everything all right? Okay. It's not charge. It's charging now. You see, it's like it's sounding as if you're something wrong. Like the picture screen. Students, it's past 6. It's 6 o'clock now. Let us just get session. I hope that you have downloaded all the notes. And just remember that today is our second last lecture. Our last session will be next week, also on the Friday. And I'm sure that you have received the notification. Thank you, Claudine, for posting the notes, the links in to the attendance register and to the notes. So please, students, just complete register. And just a reminder that at the end of the session, we just want you to please complete also then the feedback session then, or the feedback form. Anything else you want to add, Claudine? Right, students, let us get going. In tonight's lecture, we are discussing the cash flow statement still, but today we are going to have a discussion on the calculation of the cash from our operating activities, the cash flow from operating activities according to the direct method. Now, in last week's session, we did the indirect method, and remember now the indirect method is for FAC1601 only. The FAC1602 students only do the direct method, which I will discuss tonight. But if you are a 1601 student, then you must be able to do the cash flow from operating activities according to the direct or the indirect method. So you must be able to handle both methods, because in an exam, they can ask you both of those methods. Right, we go back to our notes now. First of all, we go to our notes. And the format for the cash flow statement method is on page 4 of your notes. So in your notes on page 4, that is where we find the format. And as far as the format is concerned, if we are doing the cash flow statement and we want the cash flow from operating activities, we start off with two calculations first. The first calculation is the cash receipts from customers. We subtract the cash paid to suppliers and employees. So cash receipts from customers is number 1. Cash paid to suppliers and employees is note number 2. The cash receipts from customers minus the cash receipts, the cash paid to suppliers and employees, that will give you your cash generated from operations. So as far as our cash flow statement is concerned, and if we follow the direct method, you must be able to, first of all, calculate the cash flow from the cash receipts from customers, which is explained by note number 1, and you must be able to calculate the cash paid to suppliers and employees, which is in note number 2. Let us focus on the calculation of note number 1, which is the cash receipts from your customers. And for that, I will take you now to the notes that deals with the explanations or the workings then for lecture 7. So in your notes now that deals with the workings, I'm going to take you through a scenario first, where we are now going to calculate what is the cash receipts from customers. We take a look at the information given to you. The information from the statement of financial position for 2020 and for 2019. So in a question, they will always give you the statement of financial position over a 2-year period. So from the statement of financial position, we've got information on your trade receivables control account, and we have had accrued income. Trade receivables control in 2019, 48,500 and 59,600 in 2020. Accrued income for rent, 6,000 and 2,000 respectively. The information from your statement of profit and loss and other comprehensive income is the revenue of 945,500, which is your sales, whether it's cash or credit sales, does not matter. That's the revenue. And we have got rent income of 24,000, and we have got a depreciation amount of what 1,000. No, I'm sorry, not depreciation. Your credit losses for the year amounted to 1,800. If you want to calculate what is the cash that you have received from your customers, you will construct a trade receivables control account. Now, your trade receivables control account, the asset account, increases on the debit side. And I am now going to do that calculation by saying that the opening balance of my trade receivables control is coming from my trade receivables control account, the information in my statement of financial position, and there was an opening balance then of 48,500 rand. The trade receivables, remember, will increase with the amount of the sales, and the sales coming from your statement of profit and loss and other comprehensive income, 945,500 rand. Your credit losses will decrease your trade receivables control account, and your credit losses for the year amounted to 1,800 rand. The balance is the closing balance of your trade receivables control account, which is an amount of 59,800 rand, 59,600, sorry. We will balance this account now. And if we balance this account now, you will have on your debit the 48,500. You add now the 945,500, and that will give you a total of 994. Also on the credit side, you will put now that amount of 994,000. Subtract now your credit losses of 1,800, and you subtract your 59,600, which is your closing balance, and the amount that you will now in your trade receivables control account is the amount that we must calculate, and that amount, which is the balancing figure. That 962,000 or 932,600 is then the amount that you have received, from your trade receivables deal with. We are busy with a cash flow statement. We are doing the cash flow from operating activities according to the direct method. Go back to your format. We want to calculate what is the cash receipts from customers. The cash receipts from customers consist mainly of our customers through the sales that is paid us. And if you want to calculate that amount, you will go and construct a trade receivables control account, Opening balance, bring into account the sales, bring into account the credit losses and the closing balance and the balancing figure. That is what your trade receivables has paid you for the year. Right, we are back onto the exercise, the activity that I'm busy with you now under your workings. The cash receipts from customers consist mainly of cash from your trade receivables. However, there may be other income as well. Now, in order to see if there are any other income, you go to your statement of profit and loss and other comprehensive income. And in your statement of profit and loss and other comprehensive income, there will be a rent income. And the rent income for the year is in amount of 24,000 Rand. That is our income. But we want to know what is the actual amount that we have received from rent. Because in our statement of profit and loss and in our statement of financial position, we've got accrued income of 2,000 and we've got accrued income of 6,000, and that accrued income applies to our rent. Now let us take a look at how much money did you actually receive from rental. If you want to calculate the amount that you have received from rent income, then you will say, you will take the amount that appears in your statement of profit and loss and other comprehensive income. You are supposed to have received the 24,000 Rand minus the 2,000 Rand. You minus the 2,000, you subtract the 2,000 because that is your amount of accrued income at the end of the year. You did not receive the 2,000 Rand. Because we are now calculating exactly how much cash did we receive from rental income. We were supposed to receive 24,000. At the end of the year, 2,000 is still due. Therefore, for the current year, we only received 22,000 Rand. But at the start of the financial year, there was 6,000 Rand outstanding. So my rental income, the cash that we have received from rental for this year is the amount of 28,000 Rand, which is the amount in the statement of profit and loss and other comprehensive income minus accrued income at the end of the year plus accrued income at the beginning of the year. So the cash that came into the business is 28,000 Rand in respect of rental income. I have calculated already now that the 932,600 Rand has been received from our trade receivables. So if you want to calculate what is the cash receipts from customers, remember we are now busy with note number 1 in our cash flow statement will be the 932,600 plus the 28,000 Rand, and we have received in total the amount then of 960,600 Rand, and that will give you the answer for note number 1, which is the cash received from customers. Any queries on that one? Our cash received from customers. Our cash received from customers will consist mainly of our cash from our debtors, our customers, as well as other income. If you want to calculate the cash that you have received from your customers, construct a trade receivables control account. Right, we are taking a look at scenario 2 now. We are still busy with calculating our cash receipts now from customers. Back to our workings, we take a look at our second scenario. What happened now if you must calculate the cash receipts from customers and you have got the following information? From your statement of financial position, trade receivables, opening balance 26,500, closing balance 22,600, allowance for credit losses last year was 1,200. This year the new allowance for credit losses is 1,700. We have also got income received in advance in respect of rent, and that income received in advance last year 0 and this year 4,000. In your statement of profit and loss and other comprehensive income, the revenue for the year is 880,700. I've got rental income of 36,000, and for the year my credit losses amount to 2,900. If you must now calculate the cash receipts from customers, cash receipts from customers will consist of the cash from my trade receivables, what my customers has paid me in respect of sales, as well as rental income. And that will make up my cash receipts from customers. Based on the information given, let us take a look at the information that we have got here and how are we now going to calculate this now. So now we say the opening balance of my trade receivables was an amount of 26,500. The closing balance is given to you as 22,600. That information is coming from your statement of financial position. Your sales for the year, from your statement of profit and loss and other comprehensive income, 880,700. And now we are going to deal with our credit losses. In our statement of profit and loss and other comprehensive income, our credit losses expense for the year is the amount of 2,900. If you are faced with a question like this, what you do is you first take a look at if there is any allowance for credit losses in your question. And if you go back to the information from the statement of financial position, you will see that your credit losses in the year 2019 amounted to 1,200 Rand, and your credit losses, your allowance for credit losses for 2020 is the amount of 1,700. So your allowance for credit losses has increased by the amount of 500. Now, from your knowledge of financial statements, you will recall that if you must make provision for allowance for credit losses, the two accounts affected will be allowance for credit losses and credit losses. So if your allowance increased, you have also increased your expense credit losses. So the journal entry that applied to this adjustment was the following: debit your credit losses and credit your allowance for credit losses, because your allowance for credit losses increased. So now we go back to our statement of profit and loss and other comprehensive income. And in your statement of profit and loss and other comprehensive income, you need to understand that your credit losses expense of 2,900 consists actually of two items. The credit losses consist of a 500 Rand, which was the increase to your allowance for credit losses, as well as 2,400 Rand from credit losses written off from our trade receivables. So if you must construct your trade receivables control account, your credit losses that apply to trade receivables is only 2,400 Rand. So just a reminder, just to explain that again to you. If you have got allowance for credit losses, and your allowance for credit losses has increased or decreased, you must remember that the allowance for credit losses will impact on your credit losses. So even though our expense in the statement of profit and loss and other comprehensive income for credit losses is the amount of 2,900 Rand, only 2,400 of that amount applies to your trade receivables. The other 500 is because your allowance for credit losses increased. So if you must account for the credit losses that only applies now to your trade receivables, then the amount is then 2,400 Rand. So if I now want to calculate what is the cash that I have received from my customers now in respect of sales, I will now have the following. I will take my opening balance now of 26,500. To that, I will add now my sales of 880,700, giving me an amount of 970,000. 970,000. Oh my goodness, 907,200. Put that also on your credit side, 907,200. We are going to balance this account now, and the balancing figure is what we are looking for now, which is the money which our customers has paid us. So you take the 907,200 minus 22,600 and minus 2,400, and that will give you cash that we have received from our trade receivables, 882,200 Rand. That is that balancing figure now. So if I ask you now, what is the answer for number one? The cash receipts from customers. The cash received from my trade receivables is therefore the amount of 882,200, and that amount is calculated in my trade receivables control account. I'm also looking for other income. I go to my rental income, which is in my statement of profit and loss and other comprehensive income. I see there's an income called rent income. Now the rent income for the year amounted to 36,000 Rand. That is the amount that appears in my statement of profit and loss and other comprehensive income. That's my income. However, I need to calculate what is the cash inflow from my rent income. And you go back to your statement of financial position and you will see that there was income received in advance. And your income received in advance that applied to the rent is the amount of 4,000 Rand. So go back now to your cash receipts from customers, which consist of cash from trade receivables and rental income. And the rental income, the 4,000 Rand. Remember, this is now income received in advance. Income received in advance means we receive the money during this year. Even though the money is for next year, we received it during this year. So we received the 36,000 Rand and we received the 4,000 Rand. Therefore, from rental income, we have received 40,000 Rand. And if you want to calculate now, what is the answer for note number one, which is the cash receipts from customers? Your cash receipts from customers is the amount of 922,200 Rand in this example. Any queries on the calculation of note number one? Note number 1 deals with the cash receipts from customers.
Yes, I have a question. Good evening, Mr. Ledge.
Good evening, Charles.
Hello. Why is rental income seen as an income from customers? Because it doesn't seem like a normal trade income to me.
Okay.
It's confusing to me.
Okay, I can answer that for you, Charles. When we speak about our normal trading activities, we are saying that in the normal course of the business will be buying and selling, and that would be like the normal trading activities. That is the main source of income. However, when we talk about the business activities, if the business has got empty space there, that is not going to impact on their normal trading activities and they rent it out, that income is also seen as part of their normal activities. I hope that answered that question.
Yes, thanks. So it's not the main activity,
sir.
but it's part of the normal activity. Thank you.
That is correct, yes. Okay, June, what are you saying?
Yeah, I'm just wondering, on that income we had, it's about 36,000. Doesn't that, because if we are given a figure like 36,000 that's from rental, doesn't it include that the amount we received in advance? Like in the previous example, we had to subtract. Are we not going to subtract also this 4,000 from that 36,000?
Okay, right. Okay, June, I'm going to explain this to you, and I think this will also perhaps answer Carmen's query that Carmen has got. Right. You need to understand that there is a difference between income and a receipt. There's a difference between an expense and a payment. Let us take a look at an income. An income means what is the amount that I am supposed to receive? That is income. Let me give you an example. If you must receive rental, for the month, for the year, and your rental that you must receive for the year amounts to 2,000 Rand per month, then for the year, you are supposed to receive 24,000 Rand, 12 times 2. If, however, your tenant paid you only for 10 months, you have received only 20,000 Rand. But what are you going to record in your statement of profit and loss and other comprehensive income? The trial balance will reflect 20,000 Rand, which has been received in cash. There will be an adjustment called accrued income, 4,000 Rand. So you have received 20, you bring into account an adjustment at the end of the year for accrued income. The journal entry is debit accrued income, credit rent income. So when you do your statement of profit and loss and other comprehensive income, the income for the year is 24,000 Rand. However, when you do a statement of cash flows, you want to know what is the actual amount that you have received. And in my example now, you have only received 20,000 Rand. So if you want to calculate how much cash did you receive, it will then be 24,000 minus the 4, because you did not receive the 4. The 4,000 is still due. That is accrued income. So if you want to know how much cash did you receive, what is your receipt? Your receipt, therefore, is 20,000 Rand. Now let us talk about what has happened now in this question as far as income received in advance is concerned. Remember, income means what you are supposed to receive for the year. That is income. However, in cash flow statements, we want to know what is the cash that we have received. So we have received the 36,000 Rand, and we also received money during this year for next year. That is called income received in advance. So during this year, we received the 36,000 and we received a portion of next year's money. That is why we add that. So in total, our income is 36,000, but our receipt is 40,000. I hope that clears that, Carmen, as well as Jude.
No, thank you, sir.
Okay. In a cash flow statement, remember, the focus is on cash received. How much cash did we receive? Right. So I have now, guys, explained to you note number 1. I've explained to you note number 1 in your statement of cash flows. Let me explain to you now note number 2 in our cash flow statement now. And note number 2 from your cash flow statement is called the cash that was paid to suppliers and employees. Right. So if you want to calculate what is the cash that was paid to your trade payables or to your suppliers and employees, the big expense that you will have is the cash that was paid to your trade payables for stock, whether it was purchased on cash or whether it was purchased on credit. That is your big expense, the purchases of your stock. So now let us take a look at a scenario here. I give you information from the statement of financial position. And in your statement of financial position for 2020, trade payables is 36,700. Trade payables in 2019 is 23,000 Rand. I give you a statement of profit and loss and other comprehensive income. Revenue 945,500. Cost of sales, opening inventory plus your purchases minus your closing inventory, and that is your gross profit. From that information, I ask you now, calculate for me the amount that was paid to my trade payables for inventory that was purchased. If you want to calculate that amount, you construct a trade payables control account. From the information given to you, your trade payables, remember, liability with a credit balance. The opening balance in 2019 was the amount of 23,000. The closing balance, as per example, there is the amount of 36,700. The purchases, straight from your statement of profit and loss and other comprehensive income, your purchases is the amount of 485,000 Rand. You add up your credit side, which is now more, which will be then the amount of 485,000 plus the 23,000 in total will give you 508,000. Balance that account on the credits, on the debit side, also put in the 508,000 Rand. Subtract now the 36,700 from your closing balance now. And your balancing figure is the amount of 471,000. 471,300. And that balancing figure is the amount that you have paid your trade payables now for the stock that you have purchased. Okay. Any queries on that one? That is now you go If you want to calculate what is the amount that you have paid for your trade payables, for inventory, for stock, construct a trade payables control account, and the balancing figure there, after you brought now into account the purchases, the opening stock and the closing stock, the balancing figure is what we have paid now to our trade payables then for inventory. Now let us take a look at a second scenario, because the scenario that we dealt with now was if the information supplied to you is from a business that is operating in a periodic inventory system. Because in a periodic inventory system, the amount of purchases is given to you. However, if we now take a look at what if the question that is given to you deal with the perpetual inventory system. So if the question that you are dealing with gives you information on a perpetual inventory system, remember now, in a perpetual inventory system, the only things that we have got here now is that in your statement of profit and loss and other comprehensive income, you will have revenue, cost of sales, and the gross profit. Now, in this scenario, the information from your statement of financial position, they give you trade payables for the 2 years. They give you the inventory balance for the 2 years. And if we must now calculate what is the cash that was paid to my trade payables for inventory purchase, you first construct an inventory account. The reason why you construct an inventory account is because you must first calculate how much stock was purchased. So if you construct now your inventory account, you say the opening balance of inventory, which is the value of inventory at the beginning of the year, according to the information, is the amount of 31,600 Rand, opening balance of inventory. The closing balance of inventory was an amount of 43,500. From your statement of profit and loss and other comprehensive income, we have sold stock now to the value. The purchasing price of those items that we sold was an amount of 320,800 Rand. That is therefore the amount of cost of sales. Because remember, in a perpetual inventory system, when you are having sales, you also record the cost of sales. So the inventory has decreased therefore with the amount of cost of sales, 320,800 Rand. And if you want to calculate what is the amount of stock that was purchased for the financial year, you will take the 320,800 plus the 43,500, and that will give you a total now of 300. Just balance that account quickly. 364,300. Put that amount also on the debit side. 364,300 minus the 31,600 opening balance, and that will be a balancing figure now of 332,700 Rand. Now we have calculated how much stock did we buy on credit. So the inventory account is debited with trade payables, 332,700. Your trade payables account is now credited here with inventory amount 332,700. Go to your trade payables account. Your trade payables account had an opening balance of 46,000 and a closing balance of 52,000. You add up on the credit side now. you add up on the credit side, you will have the amount of 378,700. Record that also on the debit side now. We are balancing this account, 378,700 minus the 52,000 Rand of the balance of your trade payables control. And what we are looking now for is how much did we pay our trade payables for the purchases of stock, and your balancing figure is 280,000. No, it doesn't look right at all. It is 378,700 minus 52,000, and that is giving you amount of 326,000. 326,700. And that is the amount that we are looking for. That is the amount that we have paid our trade payables for the purchases of inventory. So just to summarize this for you, okay, we are dealing still with note number 2, which is the cash that was paid to suppliers and employees. The cash paid to suppliers and employees consists mainly of cash paid to our creditors, our trade payables for inventory. If the question gives you information from a business that operates in a periodic inventory system, purchases is given to you, and then you just can construct a trade payables control account. However, if the question is giving you the perpetual inventory system, where you don't know what's the value of the inventory that was purchased, then you must first calculate an inventory account, and then you do a trade payables control account. Any queries on that one? Right, if there's nothing, we continue. So besides our trade payables, we may also have other expenses. Now, the other expenses that we may have may be, you will get all of that now in your statement of profit and loss and other comprehensive income. You may have water and electricity there. You may have telephone. You may have salaries and wages. Those are all our expenses, not payments. Therefore, if you get any other item now in your statement of profit and loss and other comprehensive income, it must be converted to a cash amount. So I'm going to take you back now to your notes now. Go for me to your notes now. And let us just go through the notes quickly. The notes that is marked lecture number 7. So let us just summarize this quickly. We are doing the cash flow from operating activities according to the direct method. I say there on page 1, the cash flow from operating activities is a difference between cash receipts from customers and the cash paid to suppliers and employees. Work now with the template that I've given you now for the cash flow statements. I say these amounts are obtained from the information in the financial statements. If you come across any non-cash items such as profit on sale of assets or depreciation, you must ignore that. Any income which is not part of operating such as dividends must also be eliminated now. So now I say each item in the income statement, in the statement of profit and loss and other comprehensive income, must be adjusted to an actual cash inflow or outflow. That is what you must determine. How do we calculate the cash receipts from customers? I say under number 1, The amount consists mainly of cash sales and cash received from our trade receivables. You calculate the cash receipts from your trade receivables, construct a trade receivables control account. So in your trade receivables control account, opening balance of trade receivables, closing balance, bring into account the sales on the debit side, on the credit side, bring into account the credit losses and the balancing figure. That balancing figure, that is what we are looking for. And that is the money that we have received from our customers. Then you go back to your statement of profit and loss and other comprehensive income, and you identify each of your incomes that you will have there. And Carmen, this is the table that you must work with. If you have got accrued income at the end of the year, subtract. If you've got accrued income at the beginning of the year, you add. Income received in advance at the beginning of the year or at the end of the year, you add. And at the beginning of the year, you subtract. So go to your statement of financial position and see if there are any accrued income or income received in advance. But the cash items, if you want to recall or record the cash receipts from customers, it consists of cash from sales. For that, you do your trade receivables contract. Go to your statement of comprehensive income, look for any other income. If there's any other income, go to your statement of financial position to see if there is any accrued income or income received in advance, and the income in the statement of profit and loss and other comprehensive income must be converted, must be changed to a cash amount by either subtracting or adding. I continue with the notes. In the notes now, I am on page 2 of my notes. Page 2 of the notes, I say, how do we calculate the cash paid to suppliers and employees? This amount consists mainly of payments to my trade payables for inventory as well as other expenses. To calculate the amount paid to my trade payables, you must create a trade payables control account and or an inventory account, depending on what information is given to you. Remember, if periodic inventory is given to you, periodic inventory system, you can only do a trade payables control account. However, if they give you the perpetual inventory system, you must do inventory and trade payables. Right. And then we go to our other expenses. Go to your statement of comprehensive income. Look for other expenses. Each of those expenses must be changed into a cash amount. So if there's accrued expenses at the end of the year, subtract. Accrued expenses at the beginning of the year, add. Prepaid expenses at the end of the year, add it. At the beginning of the year, subtract that. And that will give you then the cash receipts then from your customers and the cash paid to suppliers and employees. I want you to take the information now that I have got there for you as a class activity. The following information was taken from the books of Rupert CC on the 30th of June, the end of the financial year. From the statement of comprehensive income, I've got there for you rental income, telephone, water and electricity, insurance, and I've got rates for you. Then from the statement of financial position, I've got accrued income for rent, income received in advance for rent, prepaid expenses for insurance, accrued expenses, telephone, and for rates, and for water and electricity. And I want you to take this information into account and calculate for me what is the cash amounts received or paid during the current financial year. I've given you the income and the expenses. I've given you the adjustments, and I want you to calculate for me. I'll give you 5 minutes. Calculate for me quickly what is the actual cash receipts for rent income, what is the cash paid for telephone and water, electricity, and the insurance and the rates. I'll give you 5 minutes just to do that calculation. Right, students, let us take a look at the solution then of that activity. Amanda, I hope you've seen the the questions there. Right. So, from my statement of profit and loss and other comprehensive income, I have got income there. And my income for the financial year in the statement of profit and loss and other comprehensive income, my rent income was the amount of 29,600 Rand. I must convert that amount now to a cash amount. How do I do that? I've got accrued income for rent. When the year started, there was rental outstanding. So I must have received that amount of money. So at the beginning of the year, I will say plus the amount of 1,250. So for the current year, I have received the 29,600 for this year, and I have also received the money that was due at the beginning of the year, and I have also received the 3,200 Rand, which the tenant has paid in advance. So the tenant actually paid us the amount of, he paid 29,600 for the current year. You also paid the 1,250 that was due at the beginning of the year, and he paid 3,200 Rand for next year's money, and therefore the income received from rental, the cash received from rental for the year is the amount of 34,050, 34050. Any queries on that one? Remember now, I've given you a table to show you those calculations as when you must subtract and when you must add. If you don't understand these things, guys, if you can't see the logic, then you just go to the actual table and then you will see what must be added and what must be subtracted. But other than that, in most cases, you can figure it out. You can reason it out as to when you must add and when you must subtract. Any queries on the income? Right, I continue with the others now. That one. The next expense that I'm going to deal with is my expense called telephone. Statement of profit and loss and other comprehensive income. Our telephone expense amounted to 15,400. 15,400 is my expense. That is not the amount of money that I have paid. It's not the cash expense. My telephone expense of 15,400 must be converted to a cash amount. How do I do that? I've got accrued expenses at the beginning of the year. At the end of the year, there's nothing due. So, what is my cash outflow? I had to pay last year's amount then, so it is the 15,400 of the current year plus the 2,400 Rand that was due at the beginning of the year, and therefore my total amount of cash outflow for telephone for the year will then be the amount of 17,800, an outflow of 17,800 Rand. Let us turn our attentions now to the water and electricity. In my statement of profit and loss and other comprehensive income, my expense for the year is the amount of 13,450. That expense you will have to convert to a cash amount. Take a look at the adjustments that will impact on water and electricity, and there you see accrued expenses at the beginning of the year and accrued expenses at the end of the year. To convert that amount now to a cash amount, I will take the 13,450 and I will minus the 1,105 Rand. Because at the end of the year, there was still money due. I still owed 1,105 Rand on my water and electricity. So I was supposed to pay 13,450. I did not pay 1,105. So for this year, I've only paid 12,345. But when the year started, 985 Rand was due, plus the 985. So my total outflow for water and electricity is therefore the amount of 13,330. That is then my total outflow for water and electricity. Take a look at insurance. When we take a look at our insurance now, the insurance amount has got an amount in the trial balance, or in your statement of profit and loss and other comprehensive income, 22,600. That is my expense. My adjustment was prepaid expenses, which means that I also paid 1,060 of next year's expense was paid during this year. And at the start of the financial year, we had prepaid 875 Rand. So if I want to calculate what is the total outflow of money, of cash in respect of my insurance, it will be the amount of 22,600 plus 1,860 minus 875 Rand, and my outflow year will be the amount of 23,585. The last one is the rates. In my statement of profit and loss and other comprehensive income, my expense for rates was the amount of 18,600. I've got one adjustment that impacted on the rates, accrued expenses. But this is the accrued expenses at the beginning of the year. So I've paid 18,600 of this year's expense, and I also paid the 1,900 of last year. It was due at the beginning of the year. I also paid that 1,900. So for the current year, my total cash 100 Rand. That's the outflow for my rates expense. Right. Guys, the purpose of that activity was just to show you how you must change the income or the expense in your statement of profit and loss and other comprehensive income to a cash amount. Any queries on that? Okay, right, we are back onto our notes now. On page 4 of your notes now. Remember now, we are doing the cash flow from operating activities according to the direct method. I have calculated now note number 1 and note number 2. Note number 1 was the cash receipts from customers. Note number 2 was the cash paid to suppliers and employees. Subtract the 2, and that will give you your cash generated from operations. Now we are going to bring into account the activities that we bring into account after the cash generated from operations. These activities will be the following. It will include dividends received. interest received, if there is, loans from members. If the members has repaid the loan, it's a plus, of course, then your cash will increase. But if they have, we've got additions now, they came to us and asked for a further loan, it will decrease our cash resources because that will be an outflow of the cash. So that will be a minus. Interest paid, we must see exactly what is the amount of interest that was paid. You must indicate whether we have purchased shares in a listed company, which will be an outflow of cash. For partnerships and for sole traders, if there's any drawings, decrease your cash. The income tax and the distribution paid, you must calculate what is the actual amount that was paid. So for the income tax, you will take the amount of income tax that you are supposed to pay in your statement of profit and loss and other comprehensive income, minus the tax due at the end of the year, plus the tax due at the beginning of the year. Exactly like we have calculated last week with the indirect method, that is how you will calculate your income tax paid and your distribution paid. And then the answer that you will get there is then called the net cash from or used in operating activities. So as far as the direct and the indirect method is concerned, you will see that the only difference comes in with the cash generated from operations. That's the only difference that you have, because all these items down after the cash generated from operations is the same, whether you do direct or indirect methods. Any queries, any questions before we go into the activities? Right, the first activity that we're going to take a look at is page 5 in your notes, page 5. It is the it's the May-June 2010 paper. It's a business called Golden Globe Close Corporation. Golden Globe Close Corporation. Your information supplied to you, they give you a list of balances. Then under your additional information, they give you an extract from the statement of comprehensive income. Under number 2, they give you an extract from the statement of changes in net investment. Statement of changes in net investment, look there at that one, you will see that there was a distribution to the members of 22,000 rand. And then there was also a transfer to the asset replacement reserve. Now remember, if you transfer money to an asset replacement reserve or from the asset replacement reserve back into our retained earnings, that is a non-cash, because that is just like an internal transfer. Nothing has happened there. It will not impact on our cash resources. Number 3, they tell you that all the purchases and sales are made on credit. Number 4, the cash paid to trade creditors in respect of purchases amounted to 92,800 rand. And then under number 5, take a look at number 5. Equipment with a cost price of 12,000 that was purchased for cash could not be put into operation because of a technical fault and subsequently returned to the supplier. The supplier was unable to provide a replacement or to repair the equipment. A full cash refund was made by the supplier. Now, once again, guys, this is equipment that was purchased, and we got a refund now for the equipment. Now, equipment is part of my property, plant, and equipment. Property, plant, and equipment falls under non-current assets. And as far as cash flow statements is concerned, non-current assets, we deal with that under investing activities. So the information under number 5 has got nothing to do with operating activities. So if I now go to my required on page 6, they ask you, prepare the cash flow from operating activities section of the statement of cash flows of Golden Globe for the year ended the 28th of February. And the last sentence, the cash generated from or used in operations must be disclosed according to the direct method. Okay, so I'm going to take you through this activity now. And I'm going to do this in the workings. I've got a template there for you that we are going to work with. I'm doing the cash flow from operating activities from Golden Globe Close Corporation for the year ended the 28th of February 2010. I'm doing the cash flow from operating activities. To do the cash flow from operating activities, I start with cash receipts from customers, which I explained by note number 1, and the cash paid to suppliers and employees, and I will do that by note number 2. So I'm going to start now, and I say under my note number 1, I want to calculate what is my cash receipts from customers. And my cash receipts from customers consist mainly of cash from my trade receivables. If I want to calculate what is the cash from my trade receivables, I will complete a trade receivables control account. So in my trade receivables control account, the opening balance of my trade receivables was the amount of, go to your trade receivables in the question, and the opening balance there was 298,000 rand. That is the balance then for the year 2009. Opening balance, 298,000. My closing balance is given to me as 320,000. My sales for the year from the statement of profit and loss and other comprehensive income amounted to 451,000 rand. From my statement of profit and loss and other comprehensive income, I see that there was credit losses, and my credit losses is the amount of 3,000 rand. But in my statement of financial position, I see that there's allowance for credit losses. Last year, my allowance for credit losses was 0. This year, my allowance for credit losses is 1,000 rand. So my allowance for credit losses increased by 1,000 rand. So my credit losses of 3,000 rand consist of 1,000 rand due to the fact that my allowance increased, and only 2,000 rand applies to trade receivables. Okay, be careful for that one. I can now balance this account now. If I add up my debit side, I get 749,000. I go to my trade, the credit side, 749,000. The amount that I am looking now for is the balancing figure, and the balancing figure is 427,000, and that is the cash that I have received from my customers from my sales amount. So note number 1, which deals with my cash receipts from customers, received from my trade receivables is the amount of 427,000 rand. Right. I'm also now looking for any other income. I go to my statement of profit and loss and other comprehensive income. It starts off there with revenue, cost of sales, dividend income. Now, dividend income is income to the business, but because it is one of those abnormal incomes, we show it after the cash generated from operations. You are not going to bring into account dividends now as income. Therefore, my cash receipts from customers consist only of cash from my trade receivables, and that is the amount of 427,000 Rand that I have calculated now. Any queries on that calculation? Any queries on that one? Right, we continue. I am now going to focus now on my cash that was paid to suppliers and employees, which is my note number 2. So in my note number 2, the cash that was paid to suppliers and employees, this is a perpetual inventory system. And if you want to calculate the cash that was paid to suppliers and employees, that amount consists, first of all, of the cash that was paid to my trade payables for stock, for inventory. And because this is a perpetual inventory system, I must first do my inventory account. So if I do my inventory account, the inventory account will start off with an opening balance. Go to the opening balance of my trade receivables, of inventory. And inventory has got an opening balance of 94,700. The closing balance of my inventory is the amount of 82,300. Balance at the end of the year. My cost of sales, the amount that my stock has decreased with, 122,400. I balance this account now. I will take the 122,400. To that, I will add now my 82,300. And this will give me a total of 204,700. Put that also on the debit side, 204,700 minus the 94,700. And you have now calculated that you bought inventory for the amount of 110,000 Rand. You transfer that amount now to your trade payables control account. The inventory purchased was 110,000 Rand. Bring into account now your trade payables control, and your trade payables control started off with an opening balance of 86,000. There was a closing balance of your trade payables, and that trade payables had a closing balance of 103,200 Rand. You balance this account now, you will get 196,000 Rand. And on the debit side, 196,000. Subtract now the 196,000 minus 103,200, and that will give you the amount of 92,800 Rand. And that is the amount that we are looking for, which is the amount that was paid to my trade payables then for the purchases of inventory. I just want to point out something here to you as far as that calculation is concerned. In this question, it was not necessary for you to do that calculation, since the information under number 4 gives you that answer. It tells you under number 4, additional information, the cash paid to the trade creditors in respect of purchases was 92,800. But not in all the questions they will give. That you can also do the calculation. And therefore, I have showed you now, if that information is not given to you, how you will deal with that by doing those 2 ledger accounts. Okay. I just want to answer Carmen quickly here. If there was a balance in the 2009 column for credit losses, if there was a balance in the 2009 column, okay, right, Carmen, let me just quickly tell you now. In the 2010 column, there is allowance for credit losses of 1,000 Rand. In the 2009 column, there is nothing. So my allowance for credit losses increased by 1,000 Rand. Right. Now we're going to take a look at the next scenario. Say now in my 2009 column, and this is what you are asking now, if in my 2009 column there was an amount of 200 Rand, and now in the 2010 column there's an amount of 1,000 Rand, which means that my allowance for credit losses in my example that I've given you now has increased by 800 Rand, from 200 Rand to 1,000 Rand. Now you go back to your credit losses expense. Now your credit losses expense is 3,000 Rand. 800 Rand of that is due to the fact that allowance for credit losses increased. It increased by 800 Rand. So the balance, 2,200 Rand, will now appear in your trade receivables control account. Okay. If that is okay, Carmen, you clear on that one? If you're not clear, you can just send me another message. Right. So back to my explanation of the cash paid to suppliers and employees. The cash paid to suppliers and employees consists mainly of payments to my creditors for inventory. This was the periodic inventory system. I'm sorry, the perpetual inventory system. So in order for you to have calculated that amount, you had to do an inventory account and you had to do a trade payables account. However, they gave you the amount. So it was not necessary for you to do those accounts. I just did it and explained it to you so that in the future, if you come across a question where that amount is not given to you, then you know how to calculate that. So let us get back to our activity that we are busy with. So note number 2, the cash paid to trade payables for merchandise was actually given to you. And that amount there is then the amount of 92,800 Rand. Okay. You are now going to look for any other expenses. And all the expenses, other expenses, you go now to your statement of profit and loss and other comprehensive income. But you also need to scan on top to see if there are any adjustments. So take a look at on top in your statement of financial position, you will see there was accrued expenses for rent. There was prepaid expenses for water and electricity that appear now in your statement of financial position. So let us take a look at our expenses that we've got. We've got admin expenses. Our admin expenses amounted to, I just want to get the right amount here. Admin expenses was the amount of 40,000 rand. Rent expense. Now remember, rent expense has got an adjustment involved. Your rent expense must be converted to a cash amount. So you will take the 14,560 of rent expense. There was accrued expenses. On top you will see there was accrued expenses of 2,900. Accrued expenses means we didn't pay the 2,800 rand. It is still due at the end of the year. So if you want to calculate how much did you actually pay now for rental for the year, the cash outflow is an amount of 107 or 11,760. That is the only amount that was paid. Right. My next expense is water and electricity. There was an adjustment involved with water and electricity. So I must convert my water and electricity to a cash amount. Water and electricity is the amount of 9,400 rand. My adjustment on the top tells me there that we had prepaid expenses. What is prepaid expenses? The money went out this year. So it is plus the amount of 3,700 minus the amount of 1,300. So my outflow, cash outflow, the cash paid then for water and electricity would be the 9,400 plus the 3,700 minus the 1,300, giving you an amount of 11,800 rand. That is the amount of water and electricity that was paid. I am still in my statement of profit and loss and other comprehensive income. I'm looking for expenses. After water and electricity, I will get credit losses, non-cash expense. No money has gone out, ignore. Depreciation, non-cash expense, ignore. Next one, salaries and wages. And your salaries and wages expense is the amount of 190,000 rand. Okay. Next expense, interest on loan. Interest on loan is one of those abnormal expenses that we show after the cash generated from operations. Profit before tax, income tax. Once again, income tax we only show after the cash generated from operations. Right. So my cash paid to suppliers and employees will consist of the 92,800 that was paid to my trade payables for merchandise, 40,000 rand that was paid for admin expenses, 11,760 that was paid for rental, water and electricity I paid the amount of 11,800, and salaries and wages we paid 190,000 rand. So I have got a total outflow 346,360. That is my answer for note number 2. I will take that now over to my cash flow statement. And in my cash flow statement, I will now have the cash paid to suppliers and employees, the amount of 346,360. I have calculated my cash receipts from customers already. So my cash generated from operations is the amount of 80,640. 80,640, which is note number 1 minus note number 2. I bring into account now my items that I show after the cash generated from operations. There was dividend income of 11,100 rand. There was interest paid. Now the interest paid, we just need to look if there was any adjustments on that one. The interest paid, look on top there. The third item from the bottom in my statement of financial position, my interest expense is the amount of 4,996. Interest on long-term loan, 4,996. However, I didn't pay all of that amount of money because at the end of the year, one due, 1249 was still due. So my cash outflow was only 3,747. That was my outflow. Okay. We take a look at our income tax that was paid. How much income tax did we pay? Our statement of profit and loss and other comprehensive income show income tax expense as 19,791. Go now to my statement of financial position and you will see South African Revenue Services income tax, second last from the bottom. At the end of the year, we still owe. So it is minus 5027, minus 5027. You can pay that, plus the amount that we owed at the beginning of the year of 4,600 Rand. So if you want to know how much did you pay your tax, you're supposed to pay 19,791. You subtract the 4,000, no, the income tax, subtract the 5,027 that you still owe at the end of the year, plus the 4,600 that you owed at the beginning of the year. So your income tax that you have paid is the amount of 19,364, 19,364. That is the amount of income tax paid. The same basis we will deal with your distribution paid. Distribution paid, from the information under number 2, it tells you there the distribution to members in your statement of changes in net investment, you are supposed to pay. However, at the end of the year, you still owe 4,400 Rand in your statement of financial position. The last item there, distribution to members payable, you still owe 4,400 at the end of the year, and at the start of the financial year, you owe the amount of 1,400 Rand, which you have paid during this year. So if you want to know what is the cash outflow from your distribution paid, you will get an amount of 19,000 Rand was paid for your distribution. I'm done now with my items that I show after the cash generated from operations. Remember, there was no investment in a company, and we had also no members, no loans to the members, which will also my cash flow from operating activities. It is just that in this exercise, there was nothing like that. So we can now calculate the answer to our cash flows from operating activities. So you take the 80,640 plus 11,100 minus 3,747 minus the 19,364 minus the 19,000, and that will give you an answer of 49,629. And once you've got the answer and you see that that is a plus, it's a positive amount, now you can label it as the net cash from operating activities. Remember that if your answer here was a negative, you would have labeled it as the net cash used in operating activities. Right, students, that will conclude my discussion on that question and also my discussion for that for tonight. I just want to see if there are any queries here. Bronwyn has also once again posted there, guys, the notes, then the link for the notes. Amanda, I hope that is an answer to you. The notes was posted already on Monday, so it was there for the entire week. And once again, I will advise you to download the notes as soon as possible. So when you come to the session that you do have the notes then with you. Okay. I'm sorry, it was Lauren. Thank you, Lauren, for actually posting that. Right, guys, that is the end of my session then for today. Our discussion today was to calculate the cash flow from operating activities according to the direct method. Once again, format very important. Go through the notes. I've shown you all the calculations, and I want to wish you guys then well for the rest of the evening. Please just complete our feedback form, guys, so that we can know where we are and how we can improve on that. Ask, how does credit losses recovered affect the balance of allowance for credit losses? Right, Carmen. Credit losses recovered has got absolutely nothing to do with your allowance for credit losses. If you come across a transaction dealing with credit losses recovered, the two accounts affected would be bank and credit losses recovered. Credit losses recovered is an income, and you will show that as part of your operating activities. Okay. But credit losses recovered has got nothing to do with credit losses or allowance for credit losses. Anything else? June has got the hand up.
So I just wanted to ask, last semester when we were doing 1502, you gave us an email where then we, in the return, gave you our email where you posted the notes and everything. Is it the same with this one? Because I haven't received any notes, or if there's any email which I can just write down so that maybe some you can post the notes and everything.
Right. Some of the students that actually struggle to get the notes, I have emailed some students notes also during the course of the week. So you can use this one. I think it is FAC1601, semester 1 still, 2020 @gmail.com. Just check for me, June. I will now put it now, and then you can send that to me. But remember now, you are actually, this semester we have actually tried to get the notes, everything, the notes, the recordings, everything is on MS Teams. So if you can tune in and you can listen to me, then you will be able also to access the notes. But I have posted it now. If you just go to the chat, you will see there's an address there.
Okay, thank you, sir.
Okay, any other queries, guys? I will now also upload the solution then to these activities, because we did one now in the class, but I've also given you the October-November 2019 paper. I've given you that one as well, so I will upload the solutions then to those two questions then, say in about 10 minutes time. Any other queries? Okay, it looks like everybody is sorted.